Welcome to Market Call. Thanks for joining us. I'm Marella Fernandez. Paul MacDonald with us on the show today. He's Chief Investment Officer and Portfolio Manager at Harvest Portfolios Group. He's going to take your questions on healthcare stocks. Here's how to reach us. Call us toll free, 1-855-326-6266. You can email your questions to us as well. Market Call at bnnbloomberg.ca. Paul, thanks for coming in. Good to see you.
It's great to be here. Thanks for having me back.
We're seeing Novo Nordis stock just plunge today, and it's based on the U.S. demand or the falling U.S. demand for some of its key products. What's happening here? Can you give us a backstory?
Yeah, so Novo Nordis is one of the leading manufacturers of weight loss drugs, or the obesity drugs, as they're known, GLP-1. So people have heard of Wegovy or Ozempic. The semaglutide's the actual active ingredient here. So we are huge believers in this drug class. We think it is absolutely changing, really going to be the largest drug in the world, or drug class in the world ever. And we're looking at kind of a 2030 market value of about $120 billion, going from, back in 2021 of about $3 billion. It's huge growth. The reason behind that isn't just because of the weight loss. It's because of the just absolutely super impressive cardiovascular benefits and all these other benefits. So we don't own Novo Nordis. We've really looked at Eli Lilly. We've done a lot of research in this particular area, and we've just felt that Eli Lilly has superior efficacy with similar type of safety profile. And importantly, when we look out at the oral potential of some of Eli Lilly's drugs, that's a game changer. So you're going from a once weekly injection to an oral. And that opens up a whole new market. Plus, the cost structure of having that drug delivered is significantly reduced.
So do you think that's why you're seeing some of the support or demand sort of seep away from Novo Nordis? Is it moving to other producers of similar drugs now?
I think that is the case in part. I think that Eli Lilly's Mounjaro and Zepbound are gaining market share as their manufacturing continues to ramp up. I think that's part one. Part two, we hear a lot of people talking about Ozempic going off patent here in Canada, and it does have a patent extension out to 2030. However, there is an asterisk beside that, and hopefully we get a chance to talk. I know it's not super exciting to talk about policy, but the Inflation Reduction Act does have a component of it where CMS negotiates drug prices with the drug manufacturers. And so that's different than patents, though. And so Ozempic or semaglutide is actually on the 2026 negotiation list. So, when we talk about Medicare, Medicaid having a $14 billion spend on this particular drug, that likely causes some pricing pressures as we look out sort of 27, 28. So again, we don't own Novo Nordis, we own Eli Lilly. We're really excited to see the Orfo, the oral results come out. We're expecting that kind of Q3 this year. And that's a game changer.
Yeah, well, we'll talk a little bit more if we have some time today about the stocks in general, right? The whole space in general has been pretty depressed, and they're looking for a trigger for something to spark it up because everybody's paying attention to tech, I guess, and putting their money there. We'll hopefully have some time to talk about that later in the show. We're going to be back with Paul MacDonald of Harvest Portfolios Group. He's taking your questions today on healthcare stocks. Here's how to reach us. We're back in a moment. Welcome back. We're going to start with an email today from Shelley. Shelley writes, what are the prospects for Eli Lilly? You dipped into that a little bit at the start of the show. But generally, all of these pharma stocks we've been looking at and talking about, the big ones, have been really depressed, especially over the last 6 months. But you see what could be a light in this tunnel for Eli Lilly.
So it's the sector in general has been, I would say the market's been a tale of two markets. Just to quickly say, first half of the year, first quarter rather, healthcare was dramatically outperforming the rest of the market. And post-Liberation Day, that has completely reversed. Now, we do have some pockets with within healthcare. So med tech in particular looks promising and has performed quite well. But indeed, and even within the pharma, a couple of the names have performed quite well there. I would say Eli Lilly, though, has been relatively flat here. Really, we're waiting for the catalysts, and we've got a couple of catalysts forthcoming. Those the three main ones are earnings. I believe it's on August 7th. Okay. So we'll get some insight into continued uptake on Mounjaro and Zepbound. I want to be clear, though, that's the driver of their business, but their oncology platform is actually performing very well also. It's very well diversified, very well managed. And so the other two key outcomes are a cardiovascular outcome study for a specific cohort of population, basically assessing the impact of Zepbound and Mounjaro on cardiovascular events. And so that we're expecting any day now. Probably, maybe even comes out on the earnings call. And then from there, really the big, I'll call it Orfo. It's actually orforglipron, okay. If I pronounced it correctly. Say it 3 times. That is the oral version of their drug, of their obesity drug. And so that is a potential game changer. Now, the flip side of that is I'll point out, who wants part of a $100 billion drug class, if you will? Well, everybody does. So there's lots of people that are trying to, come up with new ideas. However, at this stage, Eli Lilly still remains the leader in the pack. We see the revenues going from $50 billion to $100 billion between now and 2030. That's huge growth. We're looking at 25% to 30% compounded growth. You are paying for it. So if we have a hiccup, at a 30x multiple, you could see that multiple compress. But we have confidence in the company to execute and be the dominant leading company in the obesity market.
Yeah, just not a lot of people paying attention to it right now. Okay, let's go to the phone lines. Chris is on the line from Victoria, BC, with a question today. Hi, Chris.
Hi, Morella. Thank you so much for taking my call. Paul, I'm wondering if I can get your opinion on Thermo Fisher Scientific. It's up quite a bit recently, but still down for sure over the last few years. And I'm wondering if you see value here for a 18-month time horizon. Thank you so much.
Yeah, again, I just see that steep decline at the start of the year that we talked about. What do you think about Thermo Fisher?
Yeah, so they just reported their quarterly earnings, and to me, Thermo Fisher is one of the dominant life science tools diagnostic companies. So when we start to think about things, everything from measuring the chemical compounds, how they're made up, to the various types of reagents that are associated with diagnosing complex cells and cancers, et cetera, they're directly involved with that whole chain. And so from our perspective, they are the leader, the most diversified. They had some issues, a couple things. One is, China, there's some tariff uncertainty there. When we think about one of the components of the demand for their products is R&D. So, think about all the lab equipment and the different reagents in the different labs. That has actually been under a bit of pressure just because of funding. So,
the U.S. have been slashing that funding, right?
Slashing, and the fears of National Institute of Health completely cutting all healthcare funding. That's been tapered back quite significantly. So the quarter was actually really, really strong, and that really, from our perspective, as we went through with the various analysts, it feels like it's almost marked a bit of a low or a turning point. We've been waiting for some sort of sign within the tools market that we're going to see some restocking, and that seems like as we look out to kind of Q3, maybe into Q4, we've now seen the trough in their earnings, and so the market responded positively. It actually followed through to some of our other holdings like Agilent and Danaher. So very much an 18-month time horizon. I think it's best in class for tools and diagnostics.
Got it. Okay, let's go to our next email, I guess. This is from Rick. He says, would you be buying Amgen at these levels? We'll pull up Amgen, take a look at where we are right now. What can you tell me about them?
Yeah, so Amgen is a large cap biotech. I would say, I want to say they have 10, 11 different drugs that are all blockbusters, so between $1 and $3 billion. And so, however, that being said, they've got kind of the slower growth profile than some of the other names that we hold, which is okay because you've got a very diversified product lineup. They had a couple trial misses recently, and you're kind of looking at kind of that mid-low digit EPS growth. And from our perspective, that's fine because it tends to be, I would say, the safer of the large cap biotechs just because of that diversity. So they do have a trial coming out that I think the street's actually paying way too much attention to. You know, you read any of the analyst reports and it's all about Maritide. And I actually think that they've got a very deep pipeline within their oncology platform. And so from our perspective, I think you can hold it. You're not looking at the same type of explosive growth that you would at kind of a mid-single digit EPS growth out over the next 3 years. You
mentioned sort of the oncology drugs a couple of times. We know it's in the pipeline for a lot of different companies. Do you think that is the next big push that we will see as far as public offerings in the drug space, the same way we saw the Wegovy's and the Ozempics, you know, that came on the market and then sort of shook everything up?
Yeah, I would say within oncology specifically, you know, this has been, you know, a 10, 12-year run. You know, if I think back to, you know, Keytruda with Merck, for example, and the immunotherapies, you know, we're getting much more scientific about the delivery here. And there's some really, really exciting things happening within combining the various immunotherapy drugs with other types of treatments, and it's actually really exciting as we look at some of the phase 3 trials that have been kind of coming out, and we expect to come out over the next 12 months.
Got it. Okay, we are going to take a quick break. We'll line up some more phone calls and emails for Paul MacDonald of Harvard's Portfolios Group. Again, he's taking your questions today on healthcare stocks. Back in a moment. Welcome back. Let's start with an email right now. Vince has written in. He says, I want to know the guest's thoughts on Vertex Pharmaceuticals. They're out of Boston, do a number of different drugs, cystic fibrosis, cancer, autoimmune. Is this a company that you know well?
Yeah, we followed it for a number of years. And so they've done just a wonderful job within cystic fibrosis and gene therapies. So their treatment for cystic fibrosis, you know, really has become the standard of care. And so one of the things we get concerned about is when you've got kind of one treatment, or now they have two treatments, you know, that who wants a piece of a very large market? Well, other companies. And so we do have some competing trials that are forthcoming. So AbbVie had a phase 3 that didn't work. That was a big catalyst for Vertex. Okay. You know, the treatment itself is it is fascinating. The science behind it is absolutely fascinating.
Tell me a little bit about it. How long has it been around?
Yeah, so it's been a few years now that they've had this, and really, you know, not just on cystic fibrosis, but on their sickle cell, where they can basically go in and it's gene editing, if you will, and basically cutting out the gene that's causing the various disease. And so, you know, with cystic fibrosis, in effect, you're getting a lot of fluid buildup in the lungs, et cetera. And so the treatments historically have been to, you know, clear out that fluid. And of course, it goes into the organs. And so this particular gene therapy, both for that and sickle cell, are really front end of the curve and innovative. From our side, though, like when I think about the sickle cell treatment, you're looking at about a $2.5 million treatment, and it's only been done for, you know, around 100 people. It does seem to work very well, but it's very, very complicated. And so what concerns me would be that you've got high concentration in very few treatments. They're trying to build that out with their non-opiate pains, which is really exciting. Okay. I'd rather pay more to have a little bit more diversity within their business. So great company, science that they've been able to do has just been absolutely front end of the curve. I'd pay a little bit more just to see a little bit more positive flow through, perhaps on that non-opiate pain plan that they have.
Got it. Okay, let's go to the phone lines. And Leon on the line today from Montreal. Hi, Leon.
Good afternoon. I'd like your comments, please, on Edwards Lifesciences. They came out with pretty good results, so can we expect good news as we move forward? Thank you. I'll close and listen in. Thank you.
Okay, thank you for the question. Let's talk about Edwards Lifesciences out of the U.S., out of California, I guess.
Yeah, so they tend to focus in on very specific valve replacements, so transaortic valve replacements, and that is again not dissimilar to the Vertex. You know, when I see a company that's highly specialized in one particular area, that does give us a little pause. The only real area that we've sort of said, okay, do you know what, we can take that risk is with Intuitive Surgical, where we see kind of a doubling of that market coming forward. So Edwards have received a couple upgrades today, I believe. Earnings came out. Stock's been doing quite well. We get some exposure through TAVR, through Medtronic, as well to a lesser degree, I guess, within some of the other types of valve replacements with Boston Scientific. So it's great quality name, tends to be higher concentrated. My advice within healthcare in general is do not just own one name, because what can go right for one can be a positive for others. But what can go wrong for one can be a positive for another, or wrong for both. As we saw today, you know, we see some pressure within Eli Lilly because of Novo's results. So diversity is the key. Okay, so within the diversification, just to get a little bit more on that, would you go sort of pharma and pharma, or would you go, you know, pharma specifically drugs, and then other sort of healthcare products like you see with Edwards Lifesciences? How would you diversify? Yeah, great question. And so that's exactly how we build our portfolio with HHL. Is we not just look at it from we want healthcare, but within we want to make sure that we have managed care. We want to make sure that we have medical devices. We want to have pharmaceuticals. We want to be diversified across the spectrum, because the symphony never plays all at the same time. And so even within that, when we peel back, say, our pharmaceutical exposure, we don't want to be over. We've got 20 stocks in our portfolio we think is a reasonable diversification, but we don't want to be overexposed to any one particular indication or one particular surgical device. We want to make sure that we have exposure across the continuum. So I would say that would be the way to look at it, is not just by subsector, but also companies within each one of the subsectors. Got it. Okay, let's go back to the phone lines. Amin is on the line. She's calling today from Ottawa. Hi, Amin.
Good afternoon. My question for the guest is about Pfizer. I bought it cheap. I'm making money on it. And does he have a better stock than that to recommend? Thank you.
Thank you for the question. So Pfizer, again, like we were talking about, a lot of the pharma stocks have been really depressed, especially post-COVID and in the last 6 months or so. So he bought it cheap. It's now at 24, 25 today. But look at that. Look at that hit it has taken sort of since the end of last year. Would you stay in Pfizer? Which of the pharmas is most promising to you, or which one or two are most promising to you that you would pick up now to get some growth? Yeah, for growth versus income, I guess, would be the, sure. You know, I think a basket's the way to go. You know, we've got a fund that serves that purpose for growth and income. And so we sold Pfizer a few years ago. And from our perspective, it came back to that pre-COVID Pfizer, where R&D productivity just wasn't there, overpaying for acquisitions. So they bought Seagen. And so I guess I would answer the question with, if a tree falls in the woods, you know, and so I'm not sure if anybody's really paying a whole lot of attention right now to Pfizer. And that kind of gives me, okay, do you know what, maybe it's time to revisit. It's probably a bit early, because I think the debt that they took on for Seagen a couple of years ago is too high. So therefore that parlays into the dividend, you know, I want to say it's around 7% or something like that. Is that really sustainable? Well, you've really got to execute here. They've got, we were talking about some of those combination trials beforehand. So some of their cancer drugs are on trial in combination with Merck right now, and it's a really exciting opportunity. Now, it's very early stages, but that could be something to watch for, really to help offset some of the patent declines that we see in through 2027, 2028, 2029. So I don't think there's a lot of people watching it. It's inexpensive, but you've got fairly high debt. You know, if you're buying it for income,
I'm not sure how sustainable that 7% would be. And if you're buying it for growth, then yeah, I would probably look at something, closer to an Eli Lilly or something like that. You're going to get a different type of risk return profile. But down at these levels, it seems like it's pretty washed out.
Got it. Okay. Let's go to another phone call. We have Patrick on the line today with a question. He's in Hamilton, Ontario. Hi, Patrick.
Hi, thanks so much. I just wanted to ask about, been seeing online a lot your HHIS. I think Eli Lilly is one of the single stocks in it. Just curious about how that would basically fit into a portfolio.
Okay, so this is the Harvest Diversified ETF. Let's see if we can pull up that chart. Generally, do you move towards ETFs as part of what you do?
Yeah, so I've got a dual mandate. I co-cover healthcare and I oversee our investment team. We've got 5 on the team, and I've got 2 portfolio managers that cover our single stock suite. So I work closely with them on their product development and including HHIS. But again, each one of those team members, they've got 15 years as portfolio managers as well. So, but HHIS is basically just a portfolio of 15 of our individual single stock securities. It has gotten a lot of attention. It seems to be working really well in this type of environment. So again, it tends to be the higher growth names within, I would say, 13 out of the 15 are on the NASDAQ, and about 55%, we cover out of the 15 names, 55% or so they're of the NASDAQ. So it tends to be the higher growth names within that particular fund. And because it has the covered call in higher growth names that tend to have higher volatility, we're able to generate really high cash flow. So somebody looking for kind of that more high growth area, it does only have the one healthcare name. I know we're talking about healthcare. It only does have the one healthcare name, which we also have a single stock in, and which is the Eli Lilly single stock share.
Okay.
And so absolutely for those looking for some higher growth and have that higher cash flow because of the option strategy, that's where HHS comes in. And it's had tremendous growth this year, both in performance-wise, but also in AUM growth as well.
Yeah, just to let people know, because we weren't able to pull up the chart, it was about 880, sort of in the depths of the April decline, and moved up now to over $13. Just for information there. All right, we're going to take a quick break. When we come back, I'll look at Paul's past picks. Stay tuned for that. Welcome back. Thanks for joining us. Let's go through some past picks from Paul. From January 27th of this year, so about 6 months ago, at the time, Merck & Co. was recommended at 97.94 US. It has dropped to 80.93 US, so a 17% drop of return and a 16% total return drop. Again, a lot of these healthcare-related stocks have been depressed from sort of the beginning of the year. You sort of picked this at the end of January. Can you speak specifically to Merck and what's happening there?
Yeah, so look, we were actually aggressive buyers of Merck on the open today. And we still very much like the company. And so the large cap diversified pharmaceutical, call it 45% of their revenue is in oncology. It goes on off patent with Keytruda in 2028. So there is a race to offset those patents. They have some issues. They've got a large vaccine business, and the issues with the vaccine business are kind of twofold. Their HPV, the Gardasil in China, really hasn't been performing, but also the appointment of RFK Jr.
Shook up the whole space.
Yeah, and he's one an anti-vaxxer and actually makes money from feeding law firms lawsuits against vaccine manufacturers, and that's really I guess I would say buyer non grata, or the beatings will continue until sentiment improves. And so, what is the catalyst for that sentiment? There's a couple things coming down the pipeline. So with Keytruda, there is going to be with the CMS later this year. If they combine a drug like Keytruda with an enzyme that is not an active ingredient but changes the mechanism of delivery, there is debate whether or not that resets the patent. So what does that mean? It means that going in and getting an IV with Keytruda versus now being able to get it through subcutaneous, which changes your delivery from, call it 6 to 7 hours to 6 to 7 minutes. If there is not a change in the active ingredient, does that actually mean that the patent can continue?
Interesting.
And so that's kind of in debate, if you will, whether or not it will be included for IRA price negotiation.
Is there any basis, has this been done before? I mean, not specifically from vaccine needle injection to IV, but I would imagine that some drugs have gone from one form to another.
Yeah, and it hasn't been an issue. This came out in May, and so it has received FDA approval. However, and it doesn't just impact Merck, it impacts Bristol Myers with Opdivo, it impacts Johnson & Johnson with Darzalex Faspro. So it is something that's heavily watched. I think it would be almost crazy if you think about the systemic savings from going from a 6 or 7 hour process and all the complications associated with that versus several minutes. However, that could be very much a clearing catalyst as we kind of look out through September, early October.
Not just time, but people, right? You can go in and get a vaccine from your pharmacist, but you're not going to get an IV sitting at your pharmacist's counter. So
that's right.
Something to think about. Okay, let's go to your next topic from January. AbbVie on the NASDAQ was $176.90 US at the time, now at $188.87, a return upside of 7%. Total return 9% upside here. They're a biopharmaceutical company, immunology, oncology, even aesthetics. So some growth here, which is nice to see.
Yeah, so we've owned AbbVie for 10 plus years now, and actually on the aesthetics business, you're bang on. We just love when they bought Allergan, which they're makers of things like Botox, et cetera. And so it's not quite as much growth. They do have some biosimilars in the space, but for that particular treatment, for those treatments, you kind of want to go with the name brand.
Sure.
And so where the concern has been Humira. It was the largest selling immunology drug. So we were looking at 20 odd plus billion dollars. It came off patent, I want to say about a year or so ago. They have built out that franchise though in immunology. So things like psoriasis to IBD through Rinvoq and Skyrizi, and really have offset that patent decline and actually have re-accelerated growth. So to me, it's a great option trader for us within our covered call strategy. And you know what? We love the diversity that they've been able to utilize Humira's cash flow to really diversify out their whole franchise. So diversified large cap biotech, solid yield, kind of high single digit EPS growth. We still very much like it.
Got it. Let's get to your third pick, which was United Healthcare at the start of the year, which has been going through a lot of different problems. So recommended at $543 US, 52, down to $266.81, a return drop of 51% and a 50% total return drop. And I'm going to ask you sort of the other side of the question is, do you expect to see a bounce back in what is a huge provider in the US?
So I feel almost like I'm on Barbara Walters. You're not going to make me cry.
It suffered what it suffered, right? On
right,
so many
right.
different ends.
Yeah,
and I've had people say, look, it will bounce back. It can't fail. It's just too big to fail.
Which we've heard in the past.
But do you agree with that?
And I don't think it's too big, and nothing's too big to fail.
Okay.
But I think that they are so integrated into the systemic delivery of healthcare in the U.S. that they are an essential service. And so, look, there's been a few things going on there. It really comes down to cost trend. Mm-hmm. And so effectively they, across the managed care businesses, they've had more people getting utilization in areas that are higher cost. And therefore that really has...
Their estimate got blown up.
Yeah, their estimates got blown up. I'll clarify, I've owned United Health now for, 10 plus years. I've covered it for, a decade plus. And the reason why we recommended it was because of its super consistent year over year, quarter over quarter earnings. And so, we're going to look at this and say, hey, do you know what? I think this, and so the earnings were this morning. The earnings call, kind of reset the entire bar down, the lower end of buy-side expectations at 16, but a resumption of growth in through 2026 is the guidance. So is it baby out with the bathwater here? I think that is the case as we go through and we look at the 2026, 2027 and kind of re-accelerate to that consistent 13 to 15% EPS growth. There's some changes within the Inflation Reduction Act on reimbursements. There's some, concerns in and around Medicaid, under the One Big Beautiful Bill. These are things that we don't think actually go through just because of the, systemic implications to people actually receiving health care. However, it is cloudy right now, very inexpensive. I want to say it's at a 35% discount to its 3-year forward earnings, and that's after a reset. So to me, absolutely, after these earnings this morning, we've been waiting to add to the position, and we were adding again on the open this morning following that earnings call.
Got it. Okay, we are going to take another quick break. We're lining up more phone calls for Paul. He's taking your questions on healthcare stocks. Back in a moment. Welcome back. We're going straight to the phone lines. Phoebe has been holding on the line in Toronto. She's got a question for Paul. Hi, Phoebe.
Hi there. Good afternoon. Paul, I was wondering if you could give me your insight on Becton Dickinson, ticker BDX. The price seems good. It's low, and they have a deal with Waters. So I'm just wondering if it's a good time to start buy some stock. Thank you.
Okay, so they do diagnostics, basically look at medication management, that kind of thing. Can you tell me about the deal? Do you know much about that deal?
A little bit. The numbers will escape me as I'm talking about who owns how much of the pro forma with Waters. And so effectively, yes, that's exactly right. They've got medication management. If you think about the hospitals, the various types of infusions, IV bags, specialty, lab equipment, that type of thing. And then they're spinning out their part of their diagnostics business with Waters. Again, Waters trying to get vertically integrated into compete with the likes of Thermo and say a Danaher. So when we looked at Becton Dickinson, their bulk of their business is within the hospital setting. And so that gives us a little bit of a pause just on how much spending is going to be occurring given some of the macro headwinds. We haven't owned Becton for a few years now, really just because we see it as more of a GDP grower, if you will, and within that hospital setting. Some of it, we keep an eye on some of the import costs from China and some of the commodity exposure that they have through various types of resin. But do you know what? Again, I think it's one of these situations where let's get through this deal with Waters and kind of reassess what the growth growth looks like pro forma.
Got it. Okay, let's go to a viewer email then. Carl has written in, what are your thoughts on Danaher, which you had just mentioned? Talk to me about Danaher, but I also want to put in your head the fact that Howard Lutnick has said as recently as today, there are tariffs coming on pharmaceuticals, right? So that's another thing that could hit this industry in a widespread kind of way. But let's talk about Danaher first. Okay,
so quickly on Danaher, love it. I just think what they're, in that tools diagnostics business, they're kind of the very high growth, I would say, compared to some of the others. Look at when we think about what their business does, they are the makers of the equipment that makes various types of biological drugs. Okay. That's one component of their business, which is super complicated. If you want to bend your brain a little bit, watch some videos on how they actually do this. It's super fascinating things about things like various types of cell cultures. Again, not dissimilar to Thermo, though they've got some exposure into the R&D space, okay, which has seen some funding compression, I guess is the word I'm looking for. And so absolutely, I think just given the barriers to entry into this business, took a little bit of hit recently just on the Waters deal. Are we going to get more competition? I love the fact, I want to say 80% of their revenue is actually reoccurring revenue, so from various types of reagents. So absolutely, I think over the medium longer term, Danaher is a great place to be within that tools, life science businesses.
Are you worried about pharmaceutical tariffs from the U.S.? Again, it's on that longer list. Once they get through the country-by-country tariff, I think they're going to start looking into more sector tariffs, and that's something they're talking about.
I think it's really complicated, and the reason why they've carved out pharmaceuticals as opposed to having them included is because the last thing that they want to do right before midterms is jam up drug prices
for Americans. Sure.
For Americans, and so look, there's a lot of policy noise out there, and when we think about some of these policies that I think we heard about the 200% tariff on pharma in the midst of the president talking about how Obama's library's gone over budget. And so the tweets are probably the bigger risk here. When we think about some of these proposals that have come out, like most favored nation drug pricing, it's, this is something that under the 2020 administration, they tried to put through in a very specific subsect of Medicare Part B, which is the hospitals, on 10 drugs. And it did not pass through because the court shut it down. So to do some of these systematic, big overhauls that are being proposed that aren't really following due process and have the capacity to cause meaningful impacts to Americans' lives, I think they're going to be really tough to put through. But that being said, we've got to get through some of the clouds. And we need to see some catalysts. Perhaps as we come into the early fall, we'll start to see some of those catalysts come through, and sort of recognition that, hey, do you know what? You saw Johnson & Johnson's earnings. The tariff impact went from 400 to 200 million. A number of other companies have indicated the same. So that's a positive from our side that we're actually starting to get visibility from the companies actually putting hard numbers around what the potential impacts are. I think a lot of the other stuff that we see out there is more noise.
Got it. We are going to take a quick break. We're going to answer more of your questions about healthcare stocks when we come back. Welcome back. Let's go to an email from Frank. He says, I'd like your guest outlook for the company Gilead Science. Gilead out of Great Britain, Sciences out of Great Britain, pharmaceutical company. Do you follow them closely? Yeah,
a little bit. And so it's been back on our radar now. And so for those that remember back, call it 5 or 6 years ago, they effectively cured Hep C. With Harvoni and Sovaldi. And the concern for us was, hey, do you know what are you going to do with that cash flow? And so at the time they had very steep competition with Glaxo and some of their products that they were looking to come to market with. They've done an exceptional job. We have owned Gilead in the past. We don't currently own it. It's back on our radar. I think they're doing a really good job in the HIV market and in the PrEP market. And so I think you can hold on to this one here, and they've really turned the corner from kind of that value trap stage that they had when they're coming through the Harvoni, Sovaldi. I should ask you too, because we've been looking at the North American stocks and talking about how depressed they've been this year, but they're actually doing quite well for Gilead. Is North American pharma and healthcare depressed compared to other markets in the world? So when we look at it, really is stock specific. So when we look at, say, an AstraZeneca, they reported this morning, beat, raise. Their oncology business is doing fantastic. You look at Novartis, and if anybody has the ability to look at earnings estimate revisions, it just continue to move higher. And the Novartis out of Switzerland doing a wonderful job. And so I don't think it's regional per se as much as and we've got a couple names like Gilead trades in the U.S. And a couple other the names in the U.S. that are actually continuing to hold on relatively well. So it's much more stock specific, I think, than regional. Got it. Okay, let's go to the phone lines. We have Henry on the line from Vaughan, Ontario, with a question. Hi, Henry.
Hi, thanks for taking my call. I'm calling about GlaxoSmithKline. It seems like they have a very good pipeline. And historically, looking at the chart long term, It looks like it's coming up basically from a bottom, and it's got a lot of potential for the future. What do you think? Thank you.
Okay, thank you for the question. Let's talk about GSK, and what are your thoughts?
Yeah, so in their vaccine business, I think it kind of suffers a little bit of the sentiment that Merck does as well, which is just general dismay around where are we going to go with vaccines in the future. Shingrix in particular, kind of relatively flat. The vaccine business is also a large component for Glaxo, and so that would be the sentiment driver, I think, here in the shorter term. The flip side is that's a third of their business. About a third of the business is kind of your general medicines, your antibiotics, et cetera. And then a third is within kind of that HIV treatments. And so for now, it looks like Gilead does have in some cases anyway, a bit of a foot forward ahead of them. But it is a race, and they can certainly catch up, and they do have some ongoing trials that could actually put them back in the front spot. But for right now, I would say that I don't really see the same type of growth. I see some of that sentiment overhang likely to persist, especially on the vaccine side.
Okay, Gilead, by the way, I should mention, is in California. I had said Great Britain, but they're out of California for headquarters. Okay, that does it for us for this part of the show. No more phone calls and no more emails at this point. But we do have new picks from Paul. We're back in a moment with that. Join us tomorrow on Market Call. Mike Philbrick on the show. He's CEO of Resolve Asset Management, and we'll take your questions on exchange-traded funds. And if you miss Market Call, check out our daily podcast. You can find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. All right, time now for new top picks from Paul. His first on the list is Stryker on the New York Stock Exchange. Stryker, you said you initiated a position way back when, I guess in 2017, which does now seem like a long time ago. Why do you like Stryker moving forward?
So look, I'm going to take a quick step back before Stryker, actually, and just kind of put my neck out a little bit and pound the table here a little bit. I haven't seen valuations in the healthcare sector like this since 2020 briefly, in the pandemic, and then the last time that we saw this was back in 1993.
Wow. So
the bread that markets don't correct on valuations, nor do they bottom, but certainly for longer term people, our HHL, that's got 20 of these names, including Stryker, which we very much like. I always say if you go to the operating room, they're not using a DeWalt saw. Stryker makes all kinds of operating room equipment. They've got a 120-page brochure on ENT specialty items. The big driver of growth, though, for them is in their orthopedics with their Mako robotic-assisted surgery.
Yes.
That market is going to grow by double over the next 5 years. And this isn't Omnitron making a surgery. It is a tool that the surgeons use that improve efficiency, in particular for Stryker, it is, within the hips and knees. And so that, and some ankle and some shoulder. And so I very much like what they're doing, like their growth profile, but they're also in the right areas as well.
And out of curiosity, and not to put you on the spot, but how much of their business is involved in the robotics part of it now?
Oh, I'd have to have a look and say we're about 45%, something like that.
Okay.
And that,
so a good chunk.
Yeah, it is very much, and that's within the orthopedics in general. Yeah.
Well, let's move to your next top pick then, which is Abbott Labs. Which is a medical equipment company as well. Tell me first a little bit about what they do and what you like about them moving forward.
Yeah, so they're one of the more diversified medical device companies. So they've got their labs inside the hospitals. Okay. Diagnostics equipment, portable diagnostics equipment. So for critical care, for if you envision getting having some diagnostics that need to be done in an ambulance, for example.
Remote care, perhaps.
Remote care, the technology as well within the hospitals and communications. And so That's a key part of their business. They've also made some very large acquisitions, call it about 5 years ago or so, St. Jude, where they were able to actually buy out sort of the cardiovascular. So if we start to think about things like pacemakers, various types of stents, catheters, that type of business. And so what I really like about them, though, is it's kind of a safer way to play a recovery here, because you've also got some established pharma within there. They've got some long life established pharma business, and then they've also got their nutritional business. So Ensure, those are kind of relatively slower growth, provide some stability in cash flow, and because you're getting that diversified operations, as we time out a recovery here, here's kind of more diversified position way to get it.
So a sort of a steadier recovery.
I think so, yeah. Then perhaps if buying an individual name, focused, an Intuitive Surgical that is, focused strictly in robotic assisted surgery, and Abbott, and they're different businesses. I get it. Abbott's just more diversified.
Got it. Okay, let's get to your next topic, which is Elevance Health, which we do get a couple of questions about every once in a while. They're smaller, of course, than United, but they're insurers in the U.S. Can you tell me a little bit more about them?
Yeah, so very similar business to what United Health does. And so they are the for-profit Blue Cross Blue Shield in 14 different states. They provide individual life insurance. They are also the administrators for healthcare for the government. So if we think about Medicare, Medicaid, Medicare Advantage programs, and so they also have their own healthcare network, so various types of doctors networks. They've got their Carelon, which is their pharmacy benefits manager. And so look, this space in general, they've all been faced with the same issues around that medical loss ratio, or their cost effectively has increased here this year more so than anybody had forecast. We think that's a temporary. We think Q3 is likely going to mark the spot, if it wasn't already marked this morning on United's print. So Elevance has already reported. They came out and reduced guidance as well. Again, same issues are causing across the entire managed care, but we see it as they are, systemic to the delivery of healthcare in the United States, and they are going to continue to do that. It's just a very rare occurrence that we have these types of cost, unpredictability.
What led to that? I mean, post-COVID, we understood that certain things were going to increase because people waited to get surgeries, replacements, that kind of thing. Do we understand yet what has led to the estimates being blown up because people are seeking more serious health care?
Yeah, very quickly. There was some changes within the codification is one. So what they were able to screen for within their population cohorts. That was one component. There was some redetermination, so they've gone back and reassessed. Medicare is for seniors, Medicaid is for the poor. The dual eligibles, they're called, there was some reassessment on that population cohort, so there's some impact from that. And then within the Inflation Reduction Act, they also changed the reimbursement structure, again, without getting into all the nitty-gritty on changing the out-of-pocket. For those that are familiar with the donut hole, they've effectively eliminated that donut hole for individuals, and there's some sharing across both manufacturer and the plan. So those are now known. We can price that into 2026.
Got it. Paul, thank you very much for coming in. Good to see you. That leaves us here at Market Call. Thanks very much for joining us. We'll see you again tomorrow.